Understand these 2 things about taxes, and you get to spend and enjoy more of your own money. Ryan, the Retirement Guy here. In this episode, I have to break the news. Taxes are going to be one of, if not the largest expenses through your retirement. But don't just take it from me. There have been studies done, research done. Even FINRA talks about it. The more you pay in state and federal income tax, the less of your own money you get to spend and enjoy. But today I'm going to show you that if you understand these 2 things, you have the potential to pay less in taxes and spend more of your own money. 1, learn how your tax return works, specifically in retirement. And 2, begin to see or visualize how accounts, earnings, income, distributions flow onto and through your tax return to see what you may be able to do to reduce what you pay over time. These 2 things can allow you to have the same amount of money coming in, but have a lower number on line 4B. That's the amount of IRA distributions that are taxable. If you have the same amount of money coming in, but less taxable distributions, that means more spendable money for you. These 2 things can allow you to have the same amount of money coming in, but keep your modified AGI below certain thresholds. And that means you can avoid certain Medicare premium surcharges and have more spendable money for you. These 2 things can allow you to have the same amount of money coming in, but have a lower number on line 6B. That's the amount of Social Security income that's taxable. There's a whole IRS publication called Publication 915 about how Social Security is taxable. What's the calculations? There's 2 really easy workshops inside this publication that you can understand better how Social Security becomes taxable, what flows over from 6A to 6B and why. But if you can reduce the number on 6B, that means more spendable money for you. Let me paint a contrast for you so you can see how your approach to your taxes makes all the difference.
Okay.
When you were working and saving before retirement, your tax return was most likely simple or simpler. You had wages, you had a little bit of interest income, maybe a little bit of capital gains. And conventional wisdom had you deferring taxes as much as possible. Your tax preparer told you that you either owe just a little bit or maybe you were getting a refund and you were happy. Now, compare that to your tax return and taxes in retirement. Your taxes still may not be that complex, but you don't have anything on line item number 1, no wages, but the other lines like 4, 5, 6, 7, especially when there's distributions from your accounts, they begin to fill up. And your AGI, line 11, is a major consideration, more so than when you were still working, because now it's directly tied to Medicare premium surcharges, and Medicare premium surcharges can add up quick. You see, when you were working and saving, you may have touched your taxes once a year just to file them.
Yep.
But when you're retired and you begin to realize that taxes could be one of your largest expenses through retirement, if you want to be proactive, if you want to see how you can pay less over time so you get to spend and enjoy more of your own money, do these 2 things. Learn how your tax return works and begin to see and visualize how accounts, earnings, income hits and flows through your tax return. Those 2 things, when done not just this year, but throughout your retirement, can help you reduce what you pay in taxes. And at the end of the day, you may find that you get to enjoy and spend more of your own money because less belongs to Uncle Sam. Any questions, let me know. We'll make more videos about it.
Okay.
But those are the 2 things you can do to make sure more of your money belongs to you.